Everything I say is not financial advice, and if you act on it, it is at your own risk. Please be aware of your own financial situation before acting on any advice I may provide by accident, because I should always word myself correctly, being a professional person in finance. Sorry, it's midnight, so I might sound a bit low.
No, you're fine. I'm just messing with you.
But it's also every time I speak, particularly when there are people who may be listening to me, it is good to get out the financial disclaimer. It is an important thing.
100%.
Too many people do take this stuff as financial advice. I like to think of it as a financial discussion. You should try and look at what's happening and work out what's happening, because at the moment there's a lot happening.
Personally, I never take anything anyone says like as, gold or go and do it, but I will dive in and research more on my own based on what people say, and then either debunk it or realize that there's some truth to it, and then kind of make my own decision from there.
You're absolutely, mate. But I mean, that all being said, like, it's a little bit interesting to wonder whether Luna was a coordinated attack or not. I'm leaning towards that it might have been a coordinated attack. We just don't have the evidence yet. We've got the USD DPEG, the UST DPEG, which was a few weeks ago now, but like, I'm surprised USDT is still holding it together. Like, when people USDT is algorithmically stable, but I reckon that's most likely to be the first to go, because BUSD is linked of the non-algorithmics. I'm not saying it's about to go, by the way, guys. Let's just also add that. Let's not be all doom and gloom. I'm just looking at the future of stable coins, sort of in the medium to long term. I believe USDT has got a higher odds than BUSD or USDC, just because it's backed by a smaller exchange. There's an old adage in the markets, which is when liquidity starts to dry up, you take liquidity from where you have to and not where you want to. And what's really interesting that we're seeing right now is a bit of an institutional shift that has really, well, I mean, we're seeing the effects of it, but that was really taking place over the last sort of month or two, whereby a lot of businesses started loading into Bitcoin between the 15 and 25 range. All of a sudden, these businesses loading into Bitcoin in the 15 to 25 range are getting a fear of a heightened interest rate. In fact, if we look at the US yield curve, I highly suggest anyone having a look at the US yield curve if you know how to read it and you haven't looked at it recently. But the yield curve essentially tells you how much bonds are going to be worth out into the future. Not how much they're going to be worth, sorry, how much the market thinks they're going to be worth, dated from like a 1 month bond, a 3 month bond, 6 month bond, 1 year bond, 2 year bond, 3 year bond, 5 year bond, 10 year bonds, 20 year bonds, and then the 30 year bonds. And that's telling you what the market thinks interest rates are going to be over the next X period of time. So at the moment, the US interest rate for the 1 year yield curve, it's actually flattened a bit in the last 24 hours. Sorry, steepened a little. It's up to 1.71%. So we're up to at the moment where it's, I believe it's 0.75 in America. So that means that they've almost got an expectation of a 1% interest rate rise over the next 1 year. So when businesses are suddenly faced down with, oh shit, we've got a 1% interest rate rise over the next 1 year, then we're going to have to cover those costs. Oh wait, we're also currently up somewhere between 100 and 200% on our Bitcoin. Where's a really easy place to take liquidity without actually losing profit? Well, we'll just take it from Bitcoin. And that's why you see these massive flow-on effects at the moment into Bitcoin acting as the opposite of an inflation hedge, whereby Bitcoin is being done out by the interest rate reaction to the heightened inflation that has been taking place. Because you've now got institutions that can easily just say, no, actually, that's fine. We can take our profits here. And then they took billions in profits. All right, that was that. Sorry, guys.
No, you're fine. You have all that background. How can I say it in the nice way? The evil hedge fund experience that we don't know.
I was an interest rates trader for people that don't know. So I work doing the front end, and also the back ends of the US Australian and British, and occasionally some German, but not really. And we followed the German market a lot because it had an impact. It had a strong impact on the markets around it. And I love interest rates. It's this little. I'm such a boring person. I love cryptocurrency and interest rates. Come talk to me, please.
I feel like I feel like you're in the right ecosystem for talking interest rates and everything. So Stephen, I did have a question, like, since you mentioned, like, you know, your past and what you were doing, like, what brought you to Cardano specifically and VyFi, or is it VyFi?
Wi-Fi with a V.
Gotcha.
A few things brought me over, like to Cardano specifically, or to running my own crypto fund. Let's start with the first one. It's a bit more backstory. Working in finance for years, you just start to realize that the financial system is really built to support the existing structures rather than trying to actually assist people that need assistance, or to distribute in an equitable manner. I'm not talking to a room of Americans. This can sometimes be a hard one. I am not a traditional market-based economist. I don't necessarily believe that the free market, in the hand of the free market, is going to be the best way to distribute goods. And cryptocurrency is, at least in an ideological sense, can be a way to ascertain a sense of the free market not being the holy thing in control of goods. You can build it on a system based on, you know, work, based on what you deserve, based on, you know, you can build it, you can inbuilt rules to actually create systems that more adequately distribute resources than the current system that we have, essentially. I don't know what that answer is. What brought me to Cardano was I saw Cardano was really trying to focus at bringing this power to marginalized and underserved communities and underbanked communities. And I want to be part of that revolution in assisting the underbanked and assisting those that don't have access to classical market structures and don't have access to classical market tools. One of the things that makes it, you know, someone without access to classical market tools is, of course, going to lack the capacity to deal with these more advanced crypto tools in the first place, right? If you've never held a deposits account, you're not going to be able to hold a crypto account and manage liquidity effectively. For example, you've never even dealt with standard interest. We are dealing with really financially vulnerable groups of society, and that's what led me to VyFi. I was playing around a lot with auto harvesters, and I found that all of the systems were kind of lacking in the capacity to simplify the actual process of auto harvesting and of building liquidity on behalf of a user. So within that, I sort of saw a gap in the market and wanted to create a system that would actually allow for a smoother auto harvesting experience. So you can have someone actually be a liquidity manager on your behalf. Essentially, that's maybe a bit of a complex way of putting it. It's more because we're not doing it. The smart contract is, of course, and so is the neural net. It's the AI. But we essentially create a system that does that liquidity management on the user's behalf, so the user can actually learn how these systems function, hopefully before they go out and get stabbed by seeing a 1,700% return and then losing all their money, or having lived through these last few weeks and being invested in Luna, I should say. So yeah, that answers those.
Thank you for answering that. Yeah, I feel like it resembles a lot of the projects and individuals that have found Cardano really being the fact of, you know, what Cardano is trying to bring to the developing world and all that. So it's really amazing to hear. And I just wanted to say hi to Ada Buck. You're up here. If you have any questions, feel free to jump in. As the room is filling up, I just wanted to say hi to everybody. We are just chatting. We have a special guest, Stephen from VyFi, up here. So if anybody has any questions in regards to VyFi, or, you know, what's happening in the market right now, I'm sure Stephen would be happy to answer. Of course, none of this is financial advice. But yeah. Oh, hi, Bitfins. How's it going?
Yo, what's up,
Hi,
Jamie? What's up,
Bitfins.
Steven? Blue.
Hey, Tyler. How are you?
All the homies, I'm doing well. I know VyFi is chilling pretty good. We've got I saw we just hit like 100K TVL on the Bitfins Corey. That was pretty sick.
Yeah, that was good fun. That's something that I've really been enjoying. crypto markets, NFT markets, absolutely dumping, and we have actually we're back to the same floor as before, but we had definitely a kick up of about 25% on our NFTs price. So like at least that.
Yeah, I think
You
NFTs
take
are
the ones that
definitely
we
kind of
can in
like.
this market.
Oh, my bad. I was just gonna say, NFTs are definitely their own beast. I mean, you hop in a Bitcoin space, and they talk shit about all the monkey JPEGs going down, but that's all they know is the monkey JPEGs. They don't know all the rest of the stuff going on in NFTs.
Mm-hmm. And that's something that I find really interesting about the NFT market as a whole. I think what will show to be one of the least successful use cases of NFT is just raw art. And I don't mean that rudely. There's always a space for art, and art can make a lot of money, and particularly, and can, if you can build a name behind yourself and a community, there's definitely a lot that you can do. But what I think will be really interesting to see in the next, and I think this will be in the next bull run, we'll really start to see these things develop technologically, is actual implementations for NFTs into systems. That's where I think you can already see that NFTs that are trying to implement stuff within a system haven't been as heavily affected as NFTs that are more art-based projects so far in this dump that we've been having. And ours is an example of that. And I think it's because if you've got an idea for building a longevous plan there, and you have some kind of, it's classic business, really. Business is problem solution, right? And if you can identify a solution that can be improved with NFTs, and you're trying to implement that solution, that NFT by definition has value. It's no longer something that's just intrinsic value. It becomes something that has real value. And it's about and that's where I think the NFT market is really going to be going over the next 2 to 3 years as a whole. I very much hope so. And you can already see those projects starting to come to life. So yeah, I'm really excited for the NFT markets in the sort of medium to long term. That's absolutely for sure.
Hi, how are you guys doing?
Hello, good. Yourself?
Oh, not bad. I had a question about the because I was looking at the USDT, and I noticed yesterday or a couple of days ago how it kind of dropped down to like 95 cents, and I was wondering what is the likelihood of it collapsing? I mean, I'm still learning. I don't fully understand how it's actually pegged. Like, are there any stable coins that are backed by like 1-for-1 for an asset or something like that, or is it just all algorithmic based where it's like it goes up as something else is burnt or something like that?
You're talking about USDT here, correct?
Yes, correct.
Yeah. So USDT is, just briefly before I start, if you are interested in this topic, I highly recommend looking up a CoffeeZilla episode on this. Look up CoffeeZilla on YouTube. He does a full 50-minute investigation just as a brief overview. They're essentially run by an exchange, right? So similar to BUSD, that's run by Binance. USDC is run by Coinbase, and USDT is run by Tether Limited, but I believe it's. I'm actually just going to quickly Google this. I should know this off the top of my head. Bitfinex, of course, Bitfinex. Now, Bitfinex were a very big player in the olden days. In the current times, Bitfinex. Let's have a look. I actually haven't seen where Bitfinex is on CoinMarketCap for a while. Let's just have a quick look. I'll tell you where they are in the list of sizes. They've had 2 billion in liquidity. They're outside of the top 10. Let's just say they're outside of the top 10. Oh, they're outside of the top 20. Nice. So, oh no, there they are. They're 7th. I missed them. They're 7th. Okay, that's not bad. 7th position, though, having the stable coin with the highest liquidity in the entire market, they just don't have the backing for the actual coin. Like, the entire value of their exchange is less than the value that's on the market in USDT. So if you have a liquidation event, so a bank run, I mean, depending on how bad that bank run is, you can reach a point where literally the entire value of their business doesn't meet the value of what's out on the market that they would be required to sell. So just from a raw numbers perspective, that doesn't work. Now, they began with a 1-to-1 peg. Then they got rid of a 1-to-1 peg for a close to 1-to-1 peg. And now they don't even release the numbers of what the pegging rates are or what assets they're holding to peg. and that started from about a year and a half ago. They no longer release the assets that they're pegging against USDT. So essentially, they're just saying, believe us, we've got the assets there. We're just not going to tell you what they are, and we're not going to tell you what % of the total value that we hold. Okay, so if you can't have that information, I would definitely suggest looking into this a bit further before following any advice that I provide, and I wouldn't touch them with a 10-foot pole.
Thanks for that explanation. So how does like the Cardano stable coins like JED, for example, differ? Like I've heard it's algorithmic based, but I haven't done enough research on it. Like how does that differ from like the USDT as far as like how it's pegged and whatnot?
In terms of USDT, like it's open about how it's pegged. They're holding collateralization of 4-to-1 in the value of Cardano against the actual token itself. And then there is, I believe there's an arbitrage they have with Shen token.
Yeah, it's Shen.
Yeah, it's Shen. So with the capacity now, what's the difference between that and USDT? And I think the bigger question there is, what is the difference between that and UST? USDT is just it's a coin that's backed by an amount of money, right? So being a coin that's backed by an amount of money, it's not algorithmically stable, it's a backed token. So this one is similar to, I'm not going to say similar to UST, but this one, we need to think of the UST experience to categorize this one more effectively. Because UST essentially had the system of arbitrage with Luna, and UST had a backing of the treasury, which now they're burning. Now, this one's got a much bigger collateralization against it because it's 4-to-1 collateralized against Cardano, which means for every $1, there's $4 equivalent of Cardano backed against that token. So what we've got with that system is a much stronger protection to the downside than you do to the upside. Is there still fun and games you can have with that system? Certainly, but I mean, you guys are traders, go figure them out.
Yeah, the biggest downside I've seen with JED is a lot of people don't realize if it goes under the 400 to 800% channel, and you're bought into liquidity with JED, I believe you're stuck with your Shen bag until it pegs itself, like it gets above that 400% again. So you have to basically weigh your pros and cons. But when you think of a stable coin, any stable coin in theory right now is susceptible to complete collapse in the right conditions.
Absolutely. Unless you have a stable coin that's backed 1-to-1 with US dollar,
which we don't currently have.
Right, and it's sometimes I feel like a lot of these businesses often just, I don't know, forget is the right word. Let's use it though. They forget basic economic principles, and it's like the other big risk that you have, and you know, we can discuss it a little further if you'd like, but I don't want to harp on because this one can turn into a big conversation, is if the value of Cardano drops for JED. So if the value of Cardano suddenly does a dump like it did today, and now the 4-to-1 current collateralization ratio drops below 100% collateralization ratio, that means now you can arbitrage it downwards. That's not good. I don't want to shit on JED, of course.
Yeah.
You know,
I think our
that's the same issue
is,
that's the same issue that exists with almost all algorithmically stable coins.
Yeah, I think the main difference between that and Luna is Luna, they basically tied them too closely together, so now it's a complete death spiral. Versus at least in the case of JED collapsing, you're not totally fucked on ADA entirely.
Exactly. But where you can get fucked is on Shen.
Right, yeah, exactly.
So, you know, it's a slightly different system. It's less susceptible. Can you say that it's impenetrable? Well, nothing's impenetrable. The Titanic proved that.
Thanks for that.
At the end of No, pleasure. At the end of the day, it comes down to a level of faith, right? And that's the issue with all currencies. The issue / advantage of all currencies. It comes down to a level of faith that you have in the currency itself. As that faith, if that faith is shaken, then as you said, in the right conditions, any stablecoin can collapse.
Not to put you on the spot, but and you may not have an answer for this, but what would be your ideal layout for a stablecoin that you see working? Is it something algorithmic based, something backed? How would it be backed, or is there even a need for a stablecoin, in the future? Do you think?
Oh, it's a super simple answer. You just peg it against the AUD. Oh, sorry, AUD. I'm Australian, of course. I'd be an Australian algorithmic coin. You just have it 1-to-1, pegged against the actual dollar itself. So that just means that every dollar that you mint, they give you $1.
Isn't that also a flaw in the Luna design? Weren't they pegging it to USDT and not even US dollar?
Yeah, that's not necessarily a problem. I don't mind doing derivatives of derivatives. I'm a derivatives trader. So like
Right.
that can cause a little bit of fluctuation, but as long as USDT is pegged to $1, that should average out to be the correct price. You
Yeah,
shouldn't get it pegged to 50 cents.
I guess my thing is like if I'm looking at a stable coin, I'd rather be pinned to the dollar like yourself. So I don't know if I'd want it pinned to another stable coin in any scenario.
Yeah, and that adds the layer risk, right? So like you could create a stablecoin that's 1-to-1 pegged against USDT, for example, but then at the end of the day, you have to rely on the system of USDT to actually have a pegging that they're not releasing. So like, I wouldn't trust a coin that's pegged to USDT, and it's another issue I had with Luna. So yeah, it's a really simple system, right? And then from there you can properly start gauging fractional reserve, which is exactly what USDT did. They began with a 1-to-1 backing in USD, and then they were like, wait a sec, we can just fractional reserve this. The same discovery they had back in the 17th century, where banks were like, wait a sec, I hold $10 million, but not everyone needs it at once. So what do? Well, they start fractionally reserving it. And when you start fractionally reserving it, now you're holding $3 million and you've got, $10 million out. You get a bank run, you're at risk of drop, you're at risk of not being able to cover everything.
I think people forget too, this isn't a problem exclusive to crypto. This could happen to like US banks and like major national banks too. If too many people pull liquidity, everything is screwed.
Absolutely, you can. And I mean, we don't even have to look back that far to see it happening in America, just the 2008 financial crisis.
That's why we need to, a lot of people say they don't want regulation, but we need to be the people bringing regulation to governments and supplying it, because otherwise you're going to have people that don't know what they're talking about and trying to make false equivalencies, making laws, and then that's where we get in deep trouble.
And that's what I most hope for, is to be invited to have a seat at the table. Like, they don't necessarily have to create the laws exactly as we suggest them, but to just have a seat at the table to be able to discuss regulation would be fantastic. Like, I would be fine to have a regulation that says you can only have a stable coin that's completely backed by the coin that is being stabled against. That is so much better than the alternative, which is you can only have a stable coin if it's a CBCD. CBCC, sorry. Which is a central bank cryptocurrency, by the way.
Now, do you see a need for? I've heard a lot of people saying like, we don't need a stable coin in the ecosystem, in crypto. Do you agree with that, or do you think there is a need for a stable coin well in the future?
I highly disagree with that. You need to have some kind of stable on-ramp and off-ramp. Until the ecosystem matures to the point where the tokens have stabilized in price, to within, a similar margin to currency, it doesn't make sense to replace the current financial system with this system. And just think of it from a day-to-day basis, like a day-to-day use basis, right? If I have 6 goats and I need to sell 6 goats because I need to buy myself repairs for the bricks on my house, right? And I'm talking in a poor nation. It doesn't make sense to sell my 6 goats for something that might be worth less in a week's time when I'm able to go buy the bricks. And that is just a general maturity that we require in the market, which requires, unfortunately, regulation. But unfortunately or fortunately, that's why I think to a certain degree it is fortunate, right? And that's exactly what you're saying. You need to take a different view on it to just say, oh, regulation's coming, how terrible. Well, no, it also means that we can begin to actually create a structure around these things so we can find out how they can be usefully implemented in a more succinct manner. Because I think, unfortunately, the large majority of the current existing projects don't necessarily boast much of a use case. And whilst they're great, and this is this is what worries me the most overall for the cryptocurrency industry. And first of all, don't hate me for this, because I'm definitely very much a believer in cryptocurrency, and I definitely think that it can change the world. I just think we haven't worked out how to do it and use it effectively yet. But if you look at most of the top 100 cryptocurrencies, you're going to see they're either a blockchain, or they're an exchange, or they're a stablecoin, of course, or they're a meme coin. Now, in terms of actually bringing utility to people, that's fantastic, right? Oh, well, and game coins, I should add. There's a few game coins in there. But let's look at gaming as a start. Gaming is a $78 billion industry. Yeah, $78 billion a year industry. Like, that's good and well, but that's big. But when you're looking at something like bonds on a global financial scale, like bonds, 78 billion is like a morning before your coffee in that market, right? They got 2 trillion a day of liquidity. So when we're looking at it on a globalized scale, you need to have a use case. So you can have trading volumes that you get in the American Stock Exchange, right? Why are people buying these tokens? Well, it doesn't help much if it's mostly just people that are already into crypto just swapping coins between themselves. That's not much of a use case. I don't think we've fully teased out how this can be implemented into the real world yet. Oh, did I drop out?
No, you're here. You're here. What's up, Anthony? I saw you pop up.
Not much, man. I mean, I think real world kind of utility is closer than Steven was letting on, at least in my opinion. Because
I'm sorry if I didn't let that on. I do think we are getting there, yes.
Because I can think of many things just today that could be done on chain, just better, faster, cheaper. So, but yeah. Anyway.
I do want to say a point to that, right? I do believe that there's many implementations that we can use right now, for sure. Better, faster, sometimes cheaper. The biggest issue, and I think the biggest divide that we have, and this is why I think education is so fundamentally important, is that like one of my favorite personal implementations for blockchain is logistics, right? So actually using it to track quality of goods and using it to ensure that the correct buyer receives the correct good at the end of the production line, and essentially use it as production line processing, right? There's so many ways you can implement blockchain, but at the end of the day, it doesn't change the fact that you have to go to the warehouse manager and explain to him, hello, that system that you've been using for 30 years that does this job, we're going to replace, and you're going to have to learn how to do blockchain now.
No, it's only as good as its implementation, obviously. You have to have buy-in from all the various stakeholders on throughout the logistics or supply chain. Otherwise, if there's a missing kink, that just defeats the whole purpose. So absolutely. But something like that could be more of like a centralized thing. So I don't know. They're interesting approaches there.
Absolutely. And I definitely think these solutions are going to be solved. Like even ones in blockchain for logistics, I think BP might be getting closer and closer and closer. Hopefully they'll have a decent blockchain implementation out in the next 3 to 4 years.
Yeah, it'll be nice when those labels you see on products actually mean something. So.
Yeah. And I mean, I was just thinking recently of a use case that we could have in Italy. Italy has got an entire department of the police force. I live in Italy, by the way. They've got an entire department of the police force dedicated to checking olive oils, because of course they do. And you could literally replace that entire department of the police force with like a blockchain. Like done.
Yeah, counterfeit goods in China is a huge issue. If you could have something authenticated, there's
absolutely
plenty of all these things that you read. What is a clean label? What does that mean? On this good, they just use words that don't really mean much. So having some sort of accountability, that's something that could be done now on chain.
And also community governance, I think, is DAOs. Don't underestimate the power of DAOs and being able to get sort of focused issue groups that are able to conduct change under the banner of an issue. A DAO is essentially just a blockchain form of a political party. Well, I mean, if you harness that power correctly, it can be. So you can have single issue parties that are able to really make a difference in things like pollution, really make a difference in things like environmental cleanups, really make a difference in things like local community topics, right? Like you can get a group of people that are like, I really don't like that we are building a new car park there. Let's get together and actually organize ourselves using a DAO so we can fund our campaign against the car park. right? The micro use cases as well, I think, are going to be absolutely amazing when this starts coming to fruition. Please, Bitfins.
Yeah, without because we're talking about real world utility, without trying to make it too much about myself and what I'm doing. I've been doing research recently because we're going to be pitching, like we're pretty transparent. We're pitching to investors soon that are outside of blockchain for some startup funding. And when I've been analyzing a lot of the stuff, there's even regulations coming down on things like keeping pets and being able to import, export pets because it destroys ecosystems with people dropping fish and reptiles in different swamp areas and states and stuff that aren't native. We've seen lots of examples of that. So with regulation coming in, if you look at the aquarium industry, it's projected to be a $20 billion industry by 2026, and there are zero viable digital options. Now, if you think about that route and you combine the ability to use blockchain as a database through NFT, because I think this is where it gives more of a use case for NFTs. You can essentially treat an NFT as a miniature database. So each person's wallet is an individual database that you can reference data from, pull files from the NFT if you so choose to do so. And then you can also use that as your login system. So it's got multifunction with just the wallet. Now, if we bring that out, and let's say we even got 5% share of a market that's expected to be 20 billion, and then we look at the cost of that, that would be a $1 billion market share from us on just the aquarium side. Now combine that with blockchain and NFTs, and the NFT industry expected to grow about 500% from where it is in market cap towards 2025. You can see just on our end versus what anybody else can do, the opportunity if you can do things properly right now.
Well, the implementation for data on NFTs, particularly for even things like school records or for, medical records or for any kind of bookkeeping system that you're really after, like even if you want to get creative, they already do it for accounting. Yeah, absolutely. There's a lot of potential there. And when talking to investors, definitely talk about the potential sizes of the markets. But I am speaking here today as a trader, and I'll just say be careful about those numbers. They can always change.
Well, yeah, of course. Anything is like, what's the potential upside and then what's the downside? I think this is where projects fail, right? Like, it's more prominent because we have a lot of cash grabs, so it's hard to differentiate who's actually serious and who's not. I've talked to a couple of projects in our ecosystem that are trying to seek even startup funding because they know they're long term. But I think it's really just people are just narrow minded and thinking inside a blockchain, what are we doing? When really we should be connecting what can we do to make the traditional world more efficient and how can we leverage that in our favor?
That's exactly it, right? It's needs to, and that's essentially the point. And just to kind of answer to Anthony as well here, I think there's so much potential in blockchain. I do think it's going to revolutionize the world. And my biggest case of history as to why I think it's going to revolutionize the world is just look at what's happened every time we've discovered new ledger technologies, right? Like if you look at the initial discovery of, the Sumerians discovered how to use cuneiform to make a ledger. That's why they invented writing. And then all of a sudden they were able to organize crops. Now you're able to create a larger society. Then we can move forwards to when they had the, what's it called? The one with the sliding beads, the abacus in the ancient Greeks and ancient Romans. And then the abacus absolutely revolutionized their society. Suddenly you're able to organize cities of 1 million people. Then we get the next evolution, which is what is called logs, when we discover logarithms. And all of a sudden we're able to take down, and that was Euler, and we were able to take down notation from, instead of having to count in sets of 1 million or being limited to a number of beads, well, no, you can just put it as a base 10 log and Bob's your uncle. Now you can actually just do it all in hand right there in front of you super quickly. And now we're suddenly able to organize $3 million societies, 3 million people societies, sorry. And then, we got a spreadsheet, and there's no need for me to tell you guys what an impact spreadsheet's made on the world. Now we have a blockchain. These leaps forwards in ledger technologies tend to revolutionize the society, whether it be going from, the agricultural age, going into the industrial age, going from the classic age to the medieval age. Like, they're preceded by changes in ledger technology. Let's hope that, not let's hope, it's not even a hope. Yeah.
That's really interesting. I haven't really thought about it like that. How would you see this ledger technology implemented in this modern world, like near term, long term?
Ideally, let's like create what I would imagine to be like a blockchain utopia. It's one where you wake up in the morning and you have the capacity to open an app and you can see what laws are being voted on today, and you can drop your coin into a ballot to vote on those laws to actually have an impact on the society around you. You wake up in the morning and you can walk out your door, and from the moment you walk out your door, you're actually able to automatically send a coffee to a machine, and that machine will make you a coffee and then bring it straight to you, but not just to you while I'm walking down the street. We've got organized logistic swarms that take things to anywhere that you need that are organized through blockchain. So I can be walking towards work, order my coffee, and a drone will just geolocate me, come down and say, here's your coffee, sir. Got my coffee before I walk into the office. I sit down on the office, and now everything that I do in the office, instead of having to be managed by these massive data spreadsheets, it's already, all that's managed for us on the blockchain. All I have to do is move a little token around and be like, oh, well, this item needs to go here now. No worries. Click, that item's gone there. And then when you finish your day, you've already got all your recorded settings for your house, which we can already do with the internet. It just takes less energy to do it on the blockchain. All the settings for your house on a blockchain that you press a button, you put a token in to say turn on, and then you get home and everything's already ready for you waiting home, but it's being managed through a blockchain, which means we use less energy to do so. Instead of, well, not yet less energy necessarily, only if we use ones like Cardano, another great advantage to Cardano. Then not to mention, yeah, that's just one quick example of how I see it impacting, the everyday life of a user. But on a more fundamental level for a bank, for example, now we can create peer-to-peer exchanges that we know that both parties are good for at any point in time, which speeds up the rate of transactions. When money moves faster, velocity of money means more people can gain access to money, in theory, if you organize it correctly. There's a lot that goes around that. I don't still want to say velocity equals more growth. But in general, and that's another set of technology changes which blockchain has a big impact on, is when we change our actual money that we use, we can have a big progress in our society. For example, when we move from well, barter never really existed in the way that we imagine, but when we move from a more trading goods type society to one where we use a stand-in for goods, a commodity-based society, to one where we use a metals-based society, so we're actually using gold, we've got enough of it now and we're able to use a gold, to moving into a banknote-based society, to then move into a cash-based society. Each of those steps preceded great fundamental shifts in social change. And, from a day-to-day monetary perspective of how you're managing your finances, all the way through to how I can get my coffee in the morning can be optimized by the blockchain. Yeah, that's my answer to that.
Wow.
Sorry, couldn't get my mic on. No, that's all. So like in the current situation right now, like with the rumors circulating and stuff like that, from a hedge fund, industry, how easy is it to do what happened to, Luna? Is that something that, like, a hedge fund could do while on their lunch break, kind of thing, or is it pretty...
Absolutely. Sure.
You don't
My
even need
my trading floor that I worked on could have done it.
Yeah, I was about to say, like, there's a lot of people rich enough as individuals that could have done it if they really wanted to. I think the numbers I saw floating around to crash Luna while shorting, because you're making profit, because whoever did it, they tracked it, they shorted Bitcoin at the same time, so they were making money on top of it happening. I think the starting amount that was quantified based on their reserves and how they have everything coded was $1 to $2 billion.
Yeah, I've heard that you could have made $50 million doing it with $1 billion. Do Kwon, in fact, egged it on. So
Yeah,
he was
did.
like, "Billionaires, come at me." All right,
Well,
one
it
big.
didn't help. I just think it's ironic. A week ago, he was on like that call with the Twitch streamer. He was like, "Yeah, 95% of coins are going to die, but there's entertainment and businesses dying."
Yeah, well, look, he was a bit prophetic, wasn't it?
Is that something that, if Citadel or BlackRock was behind, is that something that would be reported eventually? They'd have to report eventually. It would be seen.
No, absolutely not. They just have to report their earnings.
Yeah, they wouldn't be reported, but I'm sure at some point it would be found out. I find it hard to believe it's them. You could have had anybody in the crypto space with enough money and leverage that could have done that.
Like, you could just have some old hat wallets that could have done it on their own. Like, Do Kwon was pissing a lot of people off.
Yeah, this very much seems like a thing that was just
he had, like, here's an
attitude.
example. He also had that $10 million bet going with that random dude, and $1 million side bet going with another dude. Just find a bloke that's got $1 billion. Hey man, I've got an $11 million bet. Could you give it a go and I'll give you half of it? Then that guy's also making $5.5 million for splitting the bet with him. Like,
I think long term it's a good thing though. Like something like that blowing up now is way better than it blowing up 2 years down the road, where it would completely deplatform a lot of stuff. And now, at least in its infancy, with how young Luna was, with it, I think it's like a couple years old or something, right? It's at least some of those developers can now move to other layer ones or EVMs or something to move on and do more development somewhere else.
Yeah, one of the big things that, is so important about, and this is why bear markets are so important, you flush out the weak. And I don't mean that in a poor way. I don't mean that in a rude way. I just mean that in a realistic way. Business is business at the end of the day. And if you've got a business that isn't financially viable, well, then you can't have it go on forever. So...
Yeah, Charles said the same thing though. Is like he said it yesterday in a tweet. It was like, we are constantly targeted for exploits in crypto, so it is inevitable that stuff that is faulty is going to fail really bad.
Exactly. I mean, just look at what was it? I always think of iron. Was it iron? I think you have the wrong metal type.
Yeah, it was iron. You talked about the stablecoin with like Titan and shit.
It was iron. Yeah, with Titan. That's why I was thinking of Titan. There we are. Yeah. It was iron. Iron just most recently. But I mean, I personally went through a stablecoin crash. I was in Yam. That was good fun. But you learn your lessons by playing around in the market. This is why this is the technology that's still being built at the moment. And we're still trying to work out how these things and these systems work, because they're very, very complex and no one can know how they're going to react. This is part of what makes blockchain so much fun at the same time. I feel like a financial engineer every day, not just someone who trades, because we're trying new things and we're trying to make, hopefully for what I believe is the most part, the world a better place in a way, like the internet back in its early days. Like everything, it takes time, and this technology is complex.
Yeah, I really like that, and I like the point that you brought up. Like, bear markers are good because it flushes out some of these coins and platforms and projects being built, just they don't need to be built. They're not going to make it anyway. So it's a good like you said, it's a good flush to just kind of wipe all that kind of stuff out and give it a little restart and
That's
let
exactly
the
it.
projects that are build and can come out even stronger on the other end.
That's exactly it. And I mean, we already saw it in the last crypto winter. Look at projects like Uniswap. They sat there through the whole crypto winter building their stuff. Aave did the exact same thing. So this is the time that you can knuckle down, focus on what needs to be focused on, build, because now hype marketing is just not going to be as effective, which to me is a godsend. I hate hype marketing at the best of times. I think it's such an inefficient way to again, an example of inefficiency within markets. Hype marketing is an incredibly inefficient way to distinguish between a utile and a non-utile project. So I don't like inefficiencies, particularly in markets. So to just have that monkey off my shoulder is a great one. But yeah, this is actually a time of opportunity. This isn't a time of, there's a lot of doom and gloom around, but that's mostly from people who have over leveraged themselves. And I mean, I feel really sorry for those people. I really do feel sorry for those people. It's just the sad reality of a market is always going to eat up those that over leverage themselves. That's just the rules of markets.
Yeah, I think times like this are a good reminder, and the people who weren't here in the last one that they're experiencing it for the first time. And if they make it through, if they didn't over leverage themselves too much, I think, all of us are going to come out a lot stronger and a lot better off and everything like that. But I was going to ask, like, say worst case scenario, ADA drops down to like 0.01, VyFi's at, trading at 100th of a penny. What's the plan? How's a company like VyFi make it out of the bear market into the other side? Not necessarily just you, but in general.
Yeah.
What's the strategy?
So like on the circumstance that the Cardano blockchain were to collapse, we would just build our project on another chain, which, to be fair, would have been a much cheaper down payment in the first place. So there we are.
I don't mean
lost opportunity cost.
I don't mean collapse necessarily, but I'm saying like funding gone. Like ADA goes down to a penny, and during the bear market, and we're a year of crypto winter.
We're funded more than enough to get our we're funded to get our product out, right? So really, the big question that we would have here at VyFi is: do we need to change chain because of structural reasons or market reasons that have taken place within Cardano, or are we going to finish our product and then when our product releases, the market's going to decide if it's worth it or not? And then the question would be, I should say, because it's certainly not at the moment. The question would be, is ADA the correct chain to do it on? But, for the time being and for the foreseeable future that I can see, the answer to that is still yes. Like there's no sort of compunction there whatsoever. So, because nothing structurally has changed within ADA, right? So, yeah, I would say that the biggest issue is if we get to the point that the actual product's released and then we have a situation like that, then we'd be looking at bridging to other chains and garnering liquidity across other chains by creating a multi-chain platform.
I'd say from an NFT standpoint too, because we think about a lot of projects that'll get swept out. Anybody that's trying to solely rely on like something like NFT sales that'll fluctuate with markets is going to be in a real world of hurt, whether you're trying to go cross chain or not, too, just with NFTs. So I think a lot of projects need to think about that dynamic too if you want to have longevity.
Yeah, absolutely. And this is something that I've tried to actually implement within the actual base design of our ecosystem, whereby our auto harvester goes out and collects. The part that I see the most risky to ourselves is having that community faith in our auto harvester itself. We need to be able to maintain faith in that auto harvester. And as long as we can maintain faith in that auto harvester, then we can have a clear path to be able to garner funds from multiple ecosystems, multiple blockchains, and feed them back to the actual value of VyFi. So this is certainly something that I tried to attack from a structural perspective within the way that we actually set up our ecosystem. And that's because one of the big problems I saw with the current implementation for pretty much all all DEX and all DEXs that exist is that they're not actually backed by anything outside of the actual DEX itself. And I think that is strange that you're going to have a token that's minted and given to people, even if ours isn't necessarily minted beyond a certain degree, unlike others. But you need to have some kind of backing that's being produced by a service that's not actually running natively on your ecosystem, because otherwise you're just shuffling money within your ecosystem to your users. What does that create? Well, that just creates a funnel upwards, and that's essentially the same structure as a pyramid, right? Where you've just got small users that slowly get their value drained upwards. So the way that we support that is by ensuring that we are actually distributing that. Well, ensuring that's what our bar does, but it's by actually distributing that income earned through the existence of those users through to other ecosystems and other profit streams, and then sending those streams of income that come from off of our platform back onto our platform.
Yeah, I mean, it sounds really cool. I'm excited to see when it launches or how it launches and stuff. Is there any update on as far as when that's looking like it's when you guys are going to be ready to open her up?
Well, yeah, I've got a pretty clear picture of, I wouldn't say an exact timeline is the wrong word, but I've got a pretty clear picture of the process from here. we've got we're hoping to have all of our NFT and token vaults working natively with the PAB sort of by the beginning of next month. Actually, I'm really happy. This is the first time I can actually say that I've got a really clear picture of how we're going to get there, in the sense that like it also comes with a bit of a timeline with it. By the end of next month, then we basically just got to update our contracts for the swaps and for the bar itself so that they work with our implementation of the PAB. That hopefully will take no more than a month, but that can be a bit adjustable depending on, you know, some little implementation tricks that we may need. And then once we've got that together, we can hopefully start doing some internal testing, of course, because we're not just going to throw it straight out to the public first. That'll probably be another month of internal testing. And then from there, hopefully within the next month, we'll have the public testnet up. So this is the first time I think I've ever live anywhere, like actually said, I think by sort of August, early September.
So
We should have.
Sorry, I didn't mean to cut you off there. The launch that you're talking about, you said August, early September. Is this also dependent on like the hard fork coming at the end of next month?
Absolutely not. Sorry, I'll just be perfectly honest. No, absolutely not. I don't really know any project that's dependent on the hard fork that's coming out next month. But Cardano's marketing strategies are different. Sorry?
I said that's good to know. And it's interesting because I feel like I've heard people discuss that they are waiting to release their projects based off of the hard fork. So
but it's a reverse logic. It's not that they're waiting on the hard fork to be able to release their projects, it's that the hard fork is happening, which is going to hopefully improve scalability, so it makes sense to just launch it when it's happening. So we're waiting for it to happen so that then we will launch. Not we need it to happen to be able to launch.
Gotcha. So it's more really like a user experience, a better user experience.
That's it. Yeah, and less chances of, which I think at the moment isn't very likely, but less chances of overloaded blockchain screwing up or, you know, screwing up user experience. Which is, you know, makes sense to wait for that, particularly since it's as close as it is.
Well, yeah, I mean, and I think like, you know, Sunday caught a lot of heat, you know, when they launched, and, you know, it wasn't necessarily all on them. You know, the blockchain couldn't handle the massive load they got, but in turn, it did fall back on them. You know, and it's a lot of people. It's seems kind of the excuse whenever you talk to anyone from another blockchain. Oh, we've used Sunday. It can't. You know, it doesn't even do trades, and they kind of gave up on that. So I mean, I get why, you know, projects would be wanting to wait and stuff like that.
Absolutely.
Real quick, if everyone wants to share out the space, or if you have any questions for Steven on anything from hedge funds, interest rates to VyFi, you know, feel free to come on up.
This has been a bit more of a looser feel to it. I'm sorry, you guys.
No, that's kind of what, you know, what we go for, is just kind of let the conversation roll. It doesn't have to be a giant shill session. It's been awesome. But one thing I did want to ask you about is I know you guys have a big educational part to your platform, but could you kind of describe that a little? Because I mean, that's probably the, you know, feature on VyFi that I'm least familiar with, as far as what that's going to be, how it's going to work, and what it is.
Absolutely.
Exactly.
We're starting up the first processes to sort of bring that to life. I'm going to Montreal in August to do a filming series, 25 lessons on how to manage liquidity and liquidity pools. My big focus of it wants to be splitting it into two streams. So I want to have a stream for managing liquidity and a stream for managing crypto. Where crypto is going, the managing crypto side is going to be focusing much more on trading fundamentals for new users that don't really know how to approach markets. Excuse me. Sorry about that. And the liquidity fundamentals is going to be looking at how to build hedging structures and how to use liquidity pools to effectively hedge your risk within the crypto market from the trading side. So I do want it to be sequentially based. The videos I'm doing are focusing on liquidity. And where we want to be implementing some kind of methodology where we reward people for going through the lessons for example, with an NFT, once you complete an exam at the end of like a 15 lesson set, or maybe with a, I wouldn't do it. We probably wouldn't do it with VyFi unless the Treasury wanted to give away a little bit to actually, get people to use the tutorial system. So that would be a Treasury decision. But we definitely want to be implementing a reward mechanism there within our platform, so that it entices users to actually go ahead and complete those. And this is going to be set up with a learning management system, which is essentially just an online platform to allow you to learn things in an effective manner. If anyone's ever used like Blackboard while they're at university. Yeah, and that's something that I'm going to be working with my mother on. That's her expertise. She designs lessons for those things.
What's your mom do exactly?
She's been a teacher for years and years and years, and she works at a school, and she's specialized in online learning. That's what she did her pedagogy masters in. So she's been, particularly during this coronavirus period, been helping setting up those online systems and helping schools, to actually be able to create a system that effectively conveys what a lesson is supposed to be conveying while all the students are working remotely. Skills came lucky. They're like, inverted commas, yay, Corona.
That's awesome. That's I'm excited to see. Now, when do you think that's going? When are you hoping to have it rolled out or coming
We
out?
kind of want to roll it out at the same time as our auto harvester, because that's when we intend to start looking at onboarding people that are from, less financially developed nations. But it'll probably be released before the auto harvester. So, hopefully, I want to say by the end of the year. I've got a 25 video series that'll be done by the end of August, and I may as well do the other 25 videos at that point. We're already halfway there. And then we can supplement the written lessons with the video lessons, and I'm already written up probably 40 to 50 pages of lessons. Man, imagine if I turned it into a book instead of just giving it away for free. Aren't we kind? No, but I do believe that these are things that need to be known by everyone, by the way. That's fundamental.
You to write out the bear market, man. Make that ebook happen.
Yeah, look, probably, but I'd rather make that ebook in a way that we give it out to people for free. You can give ebooks out for free, can't you? Where you just I just find like as a learning experience, just being handed a book for people that aren't, for a lot of people, is a stressful endeavor, if that makes sense.
You could do that old donation model. It's like, hey, pay what you want for this book.
Yeah, that could be a way to do it. That could be a way to do it. I would feel bad charging too much for any of this education. I believe, again, I really firmly believe that this is stuff that needs to be understood by people to be able to engage with these tools. DeFi has got very, very advanced tools. I'm talking institutional grade instruments. And you can't even take a classic trading approach to institutional grade instruments. A classic trading approach will destroy you, as many people I'm sure have experienced with liquidity pools. I mean, if you approach a liquidity pool treating the LP token like a classic trading pair, well, you're going to get wrecked. You need to think of it as a hedging structure, right? It needs to exist within a hedge delivering you a yield. What's a hedge delivering you a yield? That's a bond. Okay, so what you need to do is you need to actually implement the concept of hedging structures. In my opinion, I should add, this is opinion, of course. You need to be able to add the concept of hedging structures into the way that you're using liquidity pools to be able to effectively manage your liquidity across a wide array of instruments, to be able to optimize your chances of not getting destroyed in a moment like this, right? Or maybe saving yourself or optimizing your capacity to garner yield, because no matter what happens to the price of Ethereum, you're pretty much covered on the price of Ethereum. You're alpha neutral, right? So all little systems like that, I think, are the stuff that there's no real concise font of information for. And yeah, I do agree a book would be useful to a lot. Probably would be a good idea.
I mean, I'm the type that I would much rather have it laid out in a lesson plan than a book, because I just struggle getting started sometimes on that. But you said that you wanted to focus on marketing to like the financial vulnerable. Can you? What do you mean by that? Are you guys like planning on marketing like in Africa with Cardano, or what's your idea on that?
Yeah, that's literally, you just said it, right? When I say marketing to the financially vulnerable, I don't mean like going out and finding people for payday loans. Um, what I mean by that is actually start boosting our interactivity within markets that contain more financially vulnerable individuals. So I don't really want to be focusing on many people that are, at the moment, and it happens. I can't control this, of course, but I don't want to be focusing on trying to garner money from Nigerians, as an example. Why? Because we don't have the structure to be able to take on Nigerians in a manner that's safe to Nigerians. At least your average Nigerian user, and it's not because they're not intelligent, of course, or anything like that. It's purely because they don't have the technical finesse to be able to manage these systems as they exist. Why? Because they don't have a bank, let alone a hedge, let alone like access to these institutional grade tools. So to me, it's really important about having that landing pad for new users to be able to begin engaging with these systems in a manner that is at their own pace and actually allows them the opportunity to access these functions without necessarily risking everything they have. Essentially have their hand held. Right, create a story plan for them, create a mission guide for how they can approach these things, and banks do it themselves. I mean, it's not even that crazy an idea. If anyone here used to have a child's bank account that used to set out little savings goals for you, that every month you'd go back in, deposit your money in the bank, and then they'd add it to your little checkbook, right? It's not groundbreaking systems, but it's just hopefully implemented in a way that hasn't been implemented before in the crypto ecosystem. And I wouldn't feel comfortable marketing to those before I have that system up, is essentially what I'm saying.
Yeah, that's cool. Do you guys have a plan on how you're gonna do it, or how you're planning on marketing to those areas?
We're starting to develop more of a plan now. In part, it's going to involve a lot of speaking. I find that me going out and actually talking to people, look, I don't want to toot my own horn. I'll rather stay humble, but I'm a fairly effective communicator. And going out and being able to actually interact there is a very high priority to me. Another one that I think is really important is doing more on the ground marketing in those areas, right? I want to actually be talking to the people who are using these systems on a day-to-day basis, but I want to be doing it in a way that can hopefully have a structural difference to those people's lives. And I think it's hard to get that from a banner ad. Occasionally a banner ad works, but very often you need to be there and institute things that show them how this stuff works. So I would like to get some kind of, this is all, we would love to get, this is stuff that I want to put down in Catalyst in the future, of course. We need to get funding for it, but I would love to get an example of like getting an actual lessons team going through and teaching people that are interested in those countries with workshops, and actually getting workshops hosted and training up a team of people to actually run workshops in those countries to show to people. And the workshops are focused on education. They're focused on how do these systems work, why do they exist, what can we do with them. I'm a bit of an old hat though. I'm not a marketer, right? I'm always a believer in direct marketing, and I know it's the worst in the world having people just walk up to you and try to sell you stuff, but it's just so damn effective if you can actually talk to the person. Nothing beats an actual conversation.
For sure. What's up, Rokendo? I saw you jumped up here.
Yeah, what up? I'm just hanging out, listening. What's going on?
Not much. I've had a bit of a waffly experience here. I'm sorry, guys. It's kind of been a bit everywhere in terms of the topics. I hope you don't. I know you've already said that that's okay, but it really has been a bit jumpy. Generally, I've got a much more structured plan with how I want to present my product, but today's just been talking about crypto markets generally, which I love. I rarely get to have these conversations with the public around me.
Dude, if you think this is bad, you need to go in the DGen spaces for Cardano, because it is way worse.
No, I like talking about this stuff with people like who have knowledge that I don't have. Like I said, I don't take anything someone says financial advice, but I'll look into things if I hear someone pitch something in the in a way that sounds like they know what they're talking about.
Thank you. It's definitely my favorite thing at the moment is just interest rates. Like, if anyone wants to ever talk to me about interest rates, please. I definitely think it's really interesting because one thing that's really shocking people, and actually it was mentioned in last week's space, and this is something that I really wanted to get out. I kind of blurted it out to Blue Collar Crypto and text afterwards, because my space just wasn't letting me put my hand up. But there's this really interesting phenomena that's taken place in recent history, really, whereby all of a sudden wage growth outpaced asset growth for a really short period of time. It happened from around the end of the Second World War to around the 1990s. And during that period of time, interest rates were really high. You know, you had 17% interest was a fairly regular occurrence across most of the first world. Why was that? Well, that's because the job of the central banks is to control inflation. What boosts inflation is spending. What increases spending? Well, if wages are growing faster than assets, that means more people have got cash in their hands to buy things. So that means if they've got cash in their hands to buy things, one, they more rarely need to take out a loan to be able to buy it because it's just more cost effective. And more importantly, though, if you've got a loan that costs you 19%, you're less inclined. Well, actually, at the time, they were about 45% for personal loans they got up to. If you've got a loan that's 45% to be able to take the holiday that you want to take versus if you've got a loan that's 12% to take the holiday that you want to take, you're less inclined to take that holiday on a loan. So essentially, they were trying to stem that rate of inflation of the price of goods, right? And what we're seeing take place towards the 90s, early 2000s, was all of a sudden asset growth. Really, 2008 was the real moment where it hit, but it was building up well before then, where all of a sudden asset growth overtook wages again. But that is the historic average for pretty much the entirety of human existence. There's never really been a point in time where being a worker on a field was worth more than owning the field. There's never really been a point in time where holding a bunch of gold in a room is going to be worth more than working as a cashier in the front counter. It's the actual logic that pay goes up faster than assets is the perverse one that has been ingrained into a lot of the older generation because of this rare blip in human history that they existed, right? Which is just not the historic average. What we've seen is a return to the historic average. Now, with that return to the historic average, we've had a dump in our inflation. Why have we had a dump in our inflation? Because people don't have that money to spend. So there's a lot of impacts that go on because of this. But one big thing, and it started soon after 2008, was Abenomics. And that was Shinzo Abe, the ex-prime minister of Japan, who decided to bring out a negative interest rate for the first time in central bank history, where essentially he said, if you want to put your savings in the bank, you have to pay the bank money to be able to do it. Now, the theory that he used was that to stimulate the Japanese economy, if we force people to keep money in their hands, we're going to have that same effect of when wage growth was greater than asset growth. If you got money in your hands, you're inclined to spend it. What actually happened was the exact opposite. People had money in their hands and they went, well, I can't put it in a bank. Where am I going to put it? Well, I guess I'll put it under the couch or I'll hide it inside my mattress. Now, that was the first case of Abenomics just not really succeeding in boosting inflation whatsoever. But then other countries started following in his footsteps. They're like, wait a sec. If Japan can do negative interest rates, that means we can try going down a bit lower on interest rates as well and try to boost up our asset markets. Because when you have lower interest rates, it's cheaper for businesses to buy loans, which means it's easier for businesses to then reinvest those loans into something else. So that's where you had that disconnect between the central banks looking at inflation for the average person and central banks looking at inflation from the business perspective, where they went, well, okay, inflation might go up a bit here for the average people, but at the same time, we're going to have businesses that are able to actually get more stuff done. Now, that shift wasn't managed correctly from a regulatory perspective. So we've had that increase in productivity as a result of that decrease in inflation, as a result of that, increase of inflation that has come as a result of that decreased interest rates. But that actual productivity change hasn't seen any real wage growth for workers. Workers' wages have remained stagnant. And now that's a whole philosophical, societal argument around all of that. I just want to look at it from a raw interest rates perspective. What that means is that the central banks were incentivized to keep interest rates low until now we've hit the point of runaway inflation, whereby all the other means that they've created to be able to maintain inflation in inverted commas, which were mostly, you know, a large part adjusting their actual measures. So now saying, well, CPI is not going to include this food, and CPI is not going to include that type of oil, and CPI is not going to include gas anymore. CPI, by the way, is the central. Oh my God, how have I forgotten what CPI stands for? That is despicable.
Product interest index.
Product interest. Yeah.
Index, right?
Yeah. The index. Yeah, just a second. I'm gonna consumer price index. Wow, can't believe I had to Google that. I'm sorry, guys. The consumer price index, which essentially tracks the value of a basket of goods. And the Federal Reserve have been just playing around with those figures for quite a few years now, near a decade, where they're just like, we can just forget about those goods. We can forget about those ones. We don't really need to include petrol. That doesn't impact anyone's life or anything. So they've been doing everything they can to control or mimic the impacts of that inflation, but now it's gone to a point of runaway. When you hit that point of runaway inflation, well, now you get a situation where the bank has to, at least as a show of faith, resume its original core mission statement, which is to maintain inflation between 2 to 3%. So this is now a response. This is now a response to the inflation that has taken place as a result of us supporting businesses to be able to take out loans, rather than in the past where it was a reaction to people on the street having more money on a day-to-day basis and being able to spend for things. Which is why I can foresee this credit crunch to be far more damaging on the average person than the credit crunches that we had take place 20, 30 years ago. Because now it doesn't mean that people have more money. Wages haven't grown. All we've seen is executives get paid more and the money be concentrated into a smaller amount of hands. But the central bank is, in inverted commas, going back to its original philosophy of keeping inflation between 2 and 3%. So yeah, that's my general opinion on the current state of interest rates. Thank you for letting me waffle about that.
So why do you think they're doing that? Why, despite wages being the same and them trying to, let businesses take out loans and make it easier for that to happen, why despite all this bad economic, statistics, are they continuing to do this?
Because if they don't do it, society is no longer going to be able to function to a very effective rate. The central bank has got a really important function, which is to make sure goods remain affordable. Now, I'd lived it just by going to Miami 6 months ago and going to Miami a month ago. Stuff's 20% more expensive. It's insane. And when you're supposed to have a currency that's the backing currency of the global currency system, all of a sudden heading towards runaway inflation. And to be fair, you guys should have hit runaway inflation years and years ago. You're just super fortunate that in America, you can print bonds and there's always going to be, the theory is, back to a similar theory of USDT, there's always going to be someone there to arbitrage. There's always going to be some government somewhere in the world willing to buy that bond because everyone wants US-backed debt. Once that system of everyone wanting US-backed debt begins to collapse, well, then now you don't really have a global financial system, one that holds, but more importantly, from an American's perspective, you don't have a currency that can now sustain itself because you can't just keep flushing this money into foreign bank accounts. Now, what happens when you can't keep flushing money into foreign bank accounts? Now it comes into your economy. When it comes into your economy, prices of everything boost. Now people can't afford things. If people can't afford things, in your country, the value of your currency has gone down and you're not offering more interest for the higher risk, even less people are going to want to buy your bonds. Even less people are going to want to buy your bonds, then you're not going to be able to flush out that money from your country. It's going to get even slower, which means it's going to keep piling up in your country and keep forcing up inflation. It's a runaway effect, right? So they're doing this in an attempt to maintain capital outflows so that foreign agencies still want to purchase US debt. Not just foreign, they can also be hedge funds, and it can also be internal agencies that are just willing to hold that risk.
This is interesting because the U.S. is currently buying and selling, or issuing and selling its own bonds, which is issuing and selling their own debt, and printing trillions and trillions of dollars, and also helping and injecting money into other countries' economies as well.
Absolutely, neocolonialism. Summed it up in a nutshell. You know, how do we control the world? Well, we make sure the world has to hold what we create. And neocolonialism is a loaded statement, so let's adjust that to financial hierarchy and being at the top of a financial hierarchy, right? If we don't, but it gets to the point that if you're printing so many of those bonds, people are going to want to stop taking that risk. There's just too much of it on the market. You know, what happens when you print something? The value of it goes down. What they haven't, so when the value of that goes down, that when the value of bonds go down, which means their price increases because bonds are inversely priced. But when the value of bonds go down, well, that means the value of cash goes down. If the value of cash goes down, that means the relative cost of goods go up. So if you are dumping the value of your cash, you're going to get a relative increase to the cost of your goods. Having that relative increase to the cost of your goods makes cost of living higher. Make cost of living higher makes effective wage lower. You make effective wage lower, quality of life decreases. Now, why are we doing this? Because it's essentially kind of like a dog chasing its tail, right? If you don't actually try to stop that runaway inflation, the inflation is going to do a lot more damage to you than if you try to stem it now and go through the hurt and the pain that it requires to stem it now.
Right.
Because
no one wants to pay obscene amounts of money for oranges at the grocery store.
And the problem that America has, which is what makes it a bit tougher for those that live in America, is that there's a lot of international interest to make sure the US dollar doesn't drop, which means that the global community, at least in the financial world, is very, very much interested to make sure that they don't care much about what stuff costs in America for the average consumer. Why? Because we need this system to work. Because if it doesn't, like everyone wants cryptocurrency to be an alternative, but it's not yet. Its value is not even the size of the New York Stock Exchange, like entirely. Right. So it's not prepared to be able to overtake that system in its current state. And as a result of that, the global community is very, very much inclined to not really give a fuck about what inflation is, excuse my language, in America. So who gets hurt from that if the Central Bank of America doesn't increase interest rates? Well, the people that get hurt are the Americans. But who gets hurt when the Central Bank of America increases interest rates? Well, also the Americans, but hopefully less hurt than if you just let it run. Interest rates. How I love you.
So what's the solution? Like, you know, what do you think? I guess what do you think interest rates top out at? What would be your guess?
Well, the best guess that I can have at the moment is what the market's telling me. And it's not an opinion-based guess. It's just looking at the yield curve. And the yield curve thinks in 2 years, it's going to be at 2.5%. And then it's definitely steepening out. And they think that within the sort of 10-year mark, you're looking at averaging out to around 3%. But that's also because you've got time risk involved. So they get less and less effective as time goes out. Of course, when you're gambling into the future, you become less and less accurate. Historic averages, you know, that's a tough one because it's in a different world. You need to see how the actual society around it reacts. Like if inflation isn't stemmed and inflation doesn't go down, you keep raising interest rates until inflation does. Right? Like it does hit a point where you've got a 15% interest rate. Well, now you no longer have a growth in the cost of your goods because no one's bloody buying your currency, taking out loans in your currency to force out spending.
You think there's do you think there's a chance in that they're betting on technology being a deflationary mechanism, and all the innovation in finance, in the crypto finance world, and just in general with the internet? Do you think they're betting on that to be a working factor, so they don't?
sure, but that needs to be taken within context of the size of the market against the size of other markets. Because you also need
We
to think
can't
of
hear
the
you,
resources
Steven.
of a market to be able to maintain that function. Right? Cryptocurrency, yeah, it's $1 trillion market. It fluctuates. Let's call it $1 trillion market.
He might be
It's
rugged.
$1 trillion market, but again,
Steven, you there?
The bond market is $2 trillion a day.
Steve?
So,
Steven?
Can you hear
what's
us?
the capacity for us
There.
to be able to hold that? Well, at the moment, it can work as an inflation hedge to a capacity of 1/728th of what the bond market can. So as a percentage, that's a 15th. That's not much of a percentage. So yes, it can definitely function, but I don't think governments are looking at that as an alternative for an inflation hedge, just due to its actual capacity to be able to maintain that function isn't there yet.
Makes sense. Makes sense.
Sorry, I don't mean to be doom and gloom here, guys. This isn't all necessarily doom and gloom. This is market cycles. Interest rates go up, interest rates go down, and they happen for reasons. And this is just part of markets.
No, this is
Right.
a really interesting subject because I don't know. I've read a couple books. I've read Ray Dalio. I mean, economists. I don't know whether you want to qualify these guys or not, but his book, The Changing World Order, that's kind of what got me into this space. Like, before anything, is just, that book kind of made me mad about what the Federal Reserve is doing, and then that led me down the rabbit hole. But yeah, everything that's been said here is kind of along these like grander market cycle timelines, and we're kind of in this phase where America is not America is the number one economy in the world, but in order to sustain itself and be competitive in the world versus China and Russia and all these other powers, we have to keep printing money. We have to keep buying and issuing our own bonds to sustain this kind of lifestyle that Americans are used to. And yeah, in the meantime, we have China, whose economy is the most rapid growing
Not
economy.
anymore. Not anymore.
No?
It's China. China had their housing collapse earlier this year. That was fun to watch.
Gotcha.
It's also a bit unfair to compare Russia, to be honest. Like, just to give you an idea, the size of the Russian economy is only 10% larger than the size of the Spanish economy. What Russia has is hyper concentrated wealth, which, to be fair, and this is a fun one. Have you guys ever heard of the Gini index? Should I explain what the Gini index is?
No.
So the Gini index is a measure of the Gini coefficient, is a measure of the fairness of distribution of money in a society, right? So to give you an example, the people with the highest Gini index in the world is Afghanistan, which means a rich Afghanistani on average has as close to as much money as a poor Afghanistani in the world. And why is that? Because, well, essentially they've got 12 sheep and they've probably got about a sheep each, right? And I don't mean that rudely. They've gone through a lot of problems.
So what you're saying is that the wealth gap between in these nations are very, very low.
Yes, exactly. The worst in the world is South Africa. They've got a Gini index, which is huge. It's up by a country mile above the others. And the Gini index is measured between a value of 0 and 1. Right? Now, I'm just pulling up the exact numbers. But the Gini index between America, there we are, the Gini index of America sits at around the 30 mark. The Gini index of Russia sits at the 35 mark. So,
wow.
Yeah. So in terms of equitable distribution, arguably Russia has it slightly better than Americans do. But the issue is that there isn't that much to go around. Again, their economy is 10% larger than Spain, and Spain has got 1/5 of their population. So, yeah, there's just a fun little quirk. I don't know if fun's the right word, sorry.
No, indeed, it is fun.
And there's another one of the big things that's been stemming China's growth at the moment is the fact that their cost of their wages have just been skyrocketing. I mean, the cost of a Chinese employee is a lot higher than the cost of a Chinese employee was 15 years ago. So now you've got other countries that are taking up the beacon, the likes of Vietnam, Bangladesh, that have got significantly lower cost of employee than China does. China had a housing crisis earlier this year, which absolutely China has, we won't go through the whole historical context of China and housing, but China's got a large historical context to buy houses. So people are very keen to buy houses. And you may have heard of the empty Chinese cities, where they were just building houses that were completely empty in cities so people could just buy a second house, and speculators would. And unfortunately, China, because of its demographics, because of the one child policy, they've got an inverted demographics curve. So their population is decreasing, and China don't have very high levels of immigration into their country. Mixing all these factors together, they've got a decreasing population rate with an economy that is overheated on items that aren't being used and people buying them up for speculative purposes. What you see there is a recipe for an absolute boom and bust cycle, which is exactly what happened to their housing just earlier this year. And yeah, I foresee a lot of economic problems in China.
It makes you laugh too, because you've got Trudeau saying China is a pinnacle government to look after right now with all that going on.
Yeah, China is definitely someone to look after, but one of the biggest, I think you can see, impacts of their current economic situation is the inability of China to support Russia. So China is refusing to come out and support Russia. Why is China refusing to come out and support Russia? Because honestly, China had a trade war with Australia, and Australia won. It was so funny. I had such a good time when that was happening. China was just like, no, we're not accepting Australian coal anymore. Well, it didn't start with coal. It started with wine, then went into seafood, and then it finished up at coal. And then they eventually said, no, we're no longer accepting Australian coal. At first, Australia was like, oh, shit, that sucks. Where are we going to sell our coal to now? That's where all our coal went. And then within a month, it was winter. Within a month, Beijing didn't have enough coal to actually have electricity for its heaters. So they were down to a 10-day supply of electricity in Beijing. They were like, fuck, I think we need Australian coal again. So then they opened up to Australian coal again.
Dude, where do you get your source, man? Where do you get this information? I want to know. I need to know.
I follow geopolitics very closely. I read articles about the current international affairs between countries.
Do you have one that you usually like? Do you like going to?
I listen to a lot of podcasts that talk about not a lot of podcasts, I should say YouTube channels that talk about international affairs. Visualpolitik is a good one to start with, just for getting like a large macroeconomic view. Because everything I'm discussing here is macroeconomics, I should add. But
Right.
any sort of journals, economic journals are a good one. They look at a lot of these things. Articles written by people within international relations. So a really, really interesting fellow to listen to. God, I'm so bad at names. That is my real weakness.
Is that why you put your full name as your actual Twitter name?
Yes, so I can just remember it. The name will come to me later. He's got a bit of a weird name, but he was a fellow that was arguing that he's one of the world's most respected international relations experts, and he was arguing that the entire war with Russia is the fault of NATO, which I personally disagree with, but it's a very interesting argument to look at. My internet just went down because of course.
It was China taking it out.
You said
too many. Oh yeah, and actually that's back to my original point. So China lost the trade war with Australia, and China losing the trade war with Australia, something simple as that, all of a sudden made them realize, oh, we can't just trade war with people. So now that China are being threatened with, if you acquiesce to Russia and give them what they're after, well, then we're just going to sanction you alongside Russia. China doesn't have the capacity to do that, and they've learned that firsthand. Yes, Bitfins.
I've got a fun topic switch if you're ready. It's going to throw
Please.
you through a loop. Enlighten the audience on the Great Emu War.
Basically, in the 1930s, oh God, some stupid Australians.
I only ask because you're Australian. Anybody that's
Yeah,
done
no,
Australia.
of course. Some stupid Aussies, farmers realized that emus were really annoying. To be fair, emus are mad annoying. There's a picture of me when I was 4 years old eating a sandwich, and an emu came up behind me and took the sandwich out of my hand, and my mum just got a picture of me crying with the emu in the background running away with my sandwich. So emus are an annoying bunch. So they decided that to protect the farmers' crops, they would go out and kill some emus. So they sent I think at first they sent one car with 3 troops to go out and, hoe down some emus, get the car-mounted machine guns and shoot them all out. And they weren't able to kill more than 2 emus. So they were like, all right, we need to make a more concerted effort on this. So they decided to go, you know what, we're going to send out 6 cars. So they sent out 6 cars to try to round out emus and shoot them, sent them into the desert for 2 months, and then they were able to kill, I think it was like 7 or 8 emus. And in the end, they just gave up. They were like, fuck it, you win emus.
And that's who China lost a trade war to.
Yes, look, we can beat China in a trade war, but trying to get emus, that's a tough game.
That's hilarious.
Yeah, it's actually really interesting. I don't really focus on any one source of information because I don't trust any one source of information. I get a lot of my information from, I'm ashamed to say this, but it is partially the truth, quite a few Australian outlets like The Guardian. I get it from some slightly more obscure Australian outlets, but let's go with like ones like, The Times. I prefer not to use I prefer to avoid mainstream American media. They generally have very strange twists on things. They just try to politicize everything. It's strange. European publications, there's some really good German, I was going to say talk shows, but they're not talk shows. They're like German translated publications that are really interesting. And honestly, strangely enough, a really good one is Routers. Right, I can't pronounce it. Rutgers.
Reuters or Rutgers, yeah.
Routers or Rutgers. It's one of my favorites.
Yeah. Okay. So you just, I mean, you kind of like, you're kind of like looking at all the popular news outlets. You're just paying attention more on the macroeconomics of everything. So that's dope.
Yeah, it's mostly those. And again, it's about connecting a lot of dots, right? Because macroeconomics doesn't exist as a moment. Macroeconomics exists as we are in a moment, but that moment is the culmination of all these events that have taken place before. It's about thinking about how those events relate to each other.
Yeah, what I like thinking about is thinking that all of these little factors in the economy are kind of like levers, and if you put these different levers, this is the certain outcome that's going to come out. If you pull back on certain levers, that this is what's going to happen, right? It's kind of like mechanic. But I want to ask you, do you know anything about Austrian economics? Do you know enough about that to speak on it? We lose him.
You're up, Steven?
Uh-oh.
Whoops. Yeah, I think we lost. He's still talking.
My microphone turned off, sorry.
Oh, there he is.
Yeah, sorry. No, I would say I can't speak on it from a point of authority, but I certainly have my opinions on it.
What do you think about it? I only know like a limited amount of Austrian economics. I haven't really dived too deep into it, but it seems like anyways, I don't want to say anything, but you go.
No, it's just a reductive model. Essentially, trying to use, let's hope we're talking about the same thing, but trying to use your, this is going to make me sound like a real globalist, I should add.
Do it.
But trying to use your personal economic advantages to hold power over others is a colonialist attitude. You know, it harks back to the days of mercantilism during the Renaissance, which, by the way, was the precursor to capitalism. And it is a consequence of capitalism more so than it is something that I think is utile or in any way, you know, useful to a country. A classic example of that was the trade war that Donald Trump had with China. Like, that one had zero utility whatsoever. It was just a case of posturing. And similar with China's attempt at economic posture over Australia. It had zero utility to China, and it was just kind of funny to watch as an Australian. So yeah, they're more structures that arise as a consequence of how capitalism is designed and how you can use your capitalistic power to be able to hold sway over others, rather than using a globalist view, which is, you know, as long as we have something that we can trade for and our people want to access, we should have the capacity to give them access to that. Similar with tariffs. I don't really believe in tariffs. I think tariffs are just a mechanism of control. Again, though, I'm not an authority on this by any means, so my opinion is just an opinion.
Sindor has his hand up, so it's good.
You say, hey, so I was just wondering, because I was thinking about that. China, the trade war with China, it didn't have anything to do with their desire to kind of take over, was it the Red Sea, and position themselves to like take on Taiwan?
China is a really strange case. China's big central philosophy is that you don't interfere with the politics of it, or the internal politics of another country. And they hold that really dear while simultaneously trying to interfere with the internal politics of every country. Leave a nation's affairs to themselves. So you've got ASEAN, which is the South Asian economic something cooperative or network or something like that. But it's essentially a group of people that work in Southeast Asia, and it involves Thailand, Malaysia, Indonesia, Philippines, Vietnam, Cambodia. I think Laos was recently allowed in as well. And these group countries essentially have spats with China regularly. China came out and took the Spratly Islands. They built lots of fake islands in the Spratlys, claimed it for themselves, and said, now we own the Spratlys. Is that an issue that needs to be fought against? Yes, absolutely. Is it an issue that's going to be solved with economic posturing from America? No, that's just, again, a reason to give so that America can try and show that it's more powerful than the people that they're currently arguing are the greatest economic threat. The way that you would deal with that from a, outside of a capitalistic view and instead dealing with it from a nation state view would be to actually have those countries defend their land rights based on what those land rights are. The entire realm of ASEAN has got a population only 15-20% less than China. China's not interested in having a war with ASEAN or the ASEAN countries. China's tried to invade Vietnam so many times throughout history, and not once have they succeeded. No one's ever successfully taken Vietnam. It's the Afghanistan of Southeast Asia. Does America coming in and saying, well, we're not going to give you our beef, going to do anything? Absolutely not.
No, I was asking if the
Sorry?
if the Chinese confrontation with Australia over the coal had anything to do with that blockade. Just because
no. The one
they,
between Australia and China was a result of deteriorating relations between our countries for quite a few years.
Okay.
I know
Australia,
we had a politician that was found to be being funded by the Chinese government. This was about 8 years ago. He got fired as a result of that. China got really pissy with us. We came out, like, they even started showing, they even 2 years ago, they brought out in China, in Chinese media, a meme of Australian soldiers just murdering kids in Afghanistan or Iraq, it was, or somewhere, and just saying that, look at Australians, how murderous they are. There's been a long, long list of deteriorating relations between our country for quite a few years. And the thing that's really interesting, though, is that something like 70% of our exports go to China from Australia. So whilst we've had our deteriorating relationship, we've at the same time been essentially, tied to them from a trade perspective for 30, 40 years now, ever since Malcolm Fraser opened up our country back in the late 60s, early 70s to China. Similar time to when Nixon did it. We did it just before Nixon, a couple of years before. Now, what we need to worry about as Australians, of course, is you don't want to suddenly lose 70% of your trade export. Something that your country seems very happy to do with Mexico for some reason, but that we're definitely not interested in doing with China. So that's why China started to posture over us to say, well, look, 70% of your external trade comes from us. So if we start turning off those taps to you, you've got no choice but to acquiesce to our demands. And their demands were essentially what were their demands? Really esoteric ones, stuff, very diplomatic-y ones, stuff that was like, yeah, stop being against us in the Spratly Islands. Let us have they wanted to buy a farm that was 2% of Australia's land, and they successfully purchased that farm, right? But they're trying to do so many infrastructure projects in Australia because we're, as it currently stands, a crucial aspect of their Belt and Road Initiative. And if we're going to be a crucial aspect of their Belt and Road Initiative, well, their Belt and Road Initiative, one of the core tenets is that they own the assets of the Belt and Road Initiative. They don't actually give the assets to the country. And we started to say, no, we don't want you to buy our assets. We don't want you to start buying up, portions of our water rights because we've commoditized water in Australia. So you have to buy water on the open market, just like you would a bond. And we started getting pissy about them doing it. And they wanted to try and pull their leverage to say, you have to let us do it. And then we won. So they backed off. It was great.
Can we go back to the Federal Reserve and can we go, what do you think is going to happen? When do you think this all kind of collapses back on each other? Because realistically, I don't think it's sustainable to keep injecting all this money into a dead economy.
No, it's not. And as we said, it just results in runaway inflation, which makes the average life for the average American significantly more difficult. I think it just already started. The problem that you guys have in America to a large part is that you've been able to completely disconnect the value of your markets to the actual day-to-day living standards of your people. So your media will always boast saying, oh, our stocks are up, or oh, our X has gotten more valuable, or yay, we're getting better yields on our bonds, but at the end of the day, it all just results in a harder life for the Americans, and you've got a few people at the top getting richer. The only way that I can really see an improvement in that, and it's, empires end with a whimper, not a bang. So the way that slowly deteriorates is you essentially just get more and more and more cost of living increases. And with more and more and more cost of living increases, you get a higher rate of homelessness. With a higher rate of homelessness, you get a higher rate of civil unrest. Higher rate of civil unrest leads to more, day-to-day issues within society, which then leads to more out of control spiraling asset prices, higher cost of living, more homelessness, more civil unrest, and then you just get that death spiral. What you want to avoid is that death spiral. You avoid that death spiral, well, you hope to avoid that death spiral by ensuring that prices of average goods remain accessible to people. Because at the end of the day, and the Romans figured this out a long time ago, even the Romans had a grain dole. Why? Because as long as you can keep the poor fed, they tend not to revolt. God, I'm speaking like such an aristocrat.
It's awesome. I fucking love it. It's dope.
I was wondering, Stephen, if you wanted to inject VyFi in here at all.
I can talk about VyFi for days. I don't think, unfortunately, not directly to this conversation, VyFi, unfortunately, at the moment, isn't a large enough institution to be having impacts on these games.
No,
And-
not in comparison to the current topic, but I just meant like, your project, your baby that you've been working on now that
Oh,
the
yeah,
crowd has
absolutely.
grown a bit.
So we're essentially focusing on building an AI auto harvester on Cardano, and we're launching with a DEX and a bar, which is our initial launch. And a bar is a distributive mechanism for the current. Well, it's going to initialize with swaps. So we take, I believe it's a fifth, or it might be a fourth. Sorry, it's 2 a.m, so I'm a little tired. A fifth or a fourth of all the fees generated on our exchange, and we can convert them to VyFi, and then we can send them back to people that have staked VyFi at the bar. And then as we expand that out into our auto harvester, we've got a system which allows users to, auto harvest, which means we take that harvest, we take their liquidity, the AI works out the most optimal and best places to put that. And then we take a portion of that liquidity, we convert it back to VyFi and distribute it to people that have held their VyFi at our bar. And I was talking about that earlier, how I want to, use that to actually draw in funds from outside and externally of our own ecosystem. And we want to have a learning management system that allows users to navigate themselves from using the auto harvester, where we're managing these systems for them, and actually give them the skills and the capacity to be able to teach themselves how to use these systems, so that they're not just relying on an AI to do it, but if they want, they can extend themselves and actually start managing it themselves. I guess that would be the elevator pitch. And from there, we're working to get it built, because it's a mammoth task, but it's one that's very worthwhile, I hope. I believe, not just hope.
So what can people do right now to sort of be a part of this?
To start being involved in VyFi, we have our token already launched. So you can of course buy some of our token, go to app.vyfi.io, and then you can stake that token in our token vaults, where essentially you can earn other tokens from across the ecosystem, or you can stake it for more VyFi. And we've also got our NFT that has been launched, and you can use that NFT to stake tokens, and we're essentially using that NFT as essentially a bond, as a way to be able to access tokens from across the Cardano ecosystem, or VyFi, of course, by staking that NFT into the vaults that earn you those tokens. And of course, you can join our socials and come have a chat. I love having a chat in our socials.
I think the vaults are really cool. And I mean, I've been in the community for a while. It was kind of in that lull moment in January when you guys released. I mean, the NFT vaults had been up. NFT vaults had been up before that, and it was a cool thing. Like, you guys dropped that NFT to the ICO participants
in October.
And yeah, in October you guys dropped that, and then open those vaults up. Would you? Can you talk on those a bit for anyone that's not familiar?
Yeah, absolutely. So we launched our NFTs at the end of our ICO, and that was basically to give a little bit of a reward to everyone who had participated, and we just wanted to say thank you, really. So we made up the NFT, and then I thought it would be a really fun way to make an airdrop where users would deposit that NFT into a vault, and then there would be airdropped some of our tokens for doing it. So that was just designed as a little way to reward our ICO participants. And they all got a free NFT. Unfortunately, now a lot of people who are there, our community has grown. They no longer got the NFT for free. But we essentially sent out that NFT to the world, and then we started creating vaults and finding more projects that said, hey, what you guys are doing are really cool. You should also put our NFTs up on there. And I should add, Bitfins is one of those. You can actually go stake our NFT to earn Bitfin's Corey token right now. And now, like right now, it seems to have a floor price of 800, but it got to a floor price of 1,100 just 12 hours ago. So it's actually been holding, as I said at the very beginning, it's been holding up incredibly well during this dump. I'm rather impressed.
Yeah, it's I've held on to mine and have kept it staked the entire time. And the token vaults are cool too, and it's kind of, a lower entry price point for folks that don't have the NFT. But like right now I'm like staked into Clap, and then I got my wallet register on Cardashift, and so I can just daily harvest and kind of get interest from Cardashift and from the free clat from the VyFi. It's a good way to get into projects without having to financially invest in a project. So yeah, to kind of take some risks on some projects you may not want to take financially.
That's exactly it. And what we want to be able to do with that is exactly as you described. Rather than taking it from an outright cost, your only cost is opportunity cost, and that you could have staked to another token. And it's a lot easier to deal with opportunity cost than it is to deal with outright cost.
Yeah, I was gonna say too. I don't know how the other vaults have been performing, but not despite the fact that they're holding down in like the bear stuff. Like our TVL specifically for the Corey tokens has almost doubled over the last like 3 weeks. And then like if you are a project that's participating in it, I mean, even from us, I've had a few people come in our Discord and come. They're like, hey, you know, I got these tokens from the VyFi vault. I'm just trying to check out what's going on. And so it's like cyclical, it like feeds itself and helps everybody else involved as well.
Absolutely. And that's the other big thing. We've got access to a large community, which, you know, every day I'm fortunate and thankful for my community. And having access to a large community means that we can garner interest in projects from our community. And it's important, you know, it is important to a degree to want to understand, you know, and there's, you know, it's a big question in all of crypto, really. To what extent should we be, you know, picking and choosing these tokens that we offer on a, you know, should we be doing an audit of them? You know, to what extent should we be managing it there? But the reality is these contracts are all going to be factory contracts. So it is up to the community to go in there and decide where do they think that it might be worth, you know, putting your time rather than your money, and finding out and learning about other projects. It is also a nice way to introduce people to new projects that are up and coming. Anthony, please.
I wanted to know a little bit more about like the auto harvester. So like on MinSwap, you can click harvest, and then you get your min tokens when you set up ADA and then whatever token you're staking with them. How does the auto harvest work? And then if you mentioned like optimal times for harvesting, but if everyone's harvesting at optimal times, doesn't that change kind of what's optimal?
Like, yeah, the auto harvester is based on a neural net AI. So that's an artificial intelligence algorithm that teaches itself how to optimize systems. These have been implemented into many systems outside of trading, of course, and I've also been implemented into many systems within trading. Essentially, what we do is we optimize current and permanent risk against yield, looking at multiple platforms to see the yield being offered on token pairs against the impermanent risk of holding those tokens. And then we essentially create a linear risk scale, and then we distribute accordingly to that linear risk scale. So we can bracket it into low risk, medium risk, high risk. We also want to have a stablecoin risk option, but saying a stablecoin risk option right now might seem like it's super risky.
That's interesting. Is there like a rule of thumb, or how much, or do you have to just have a ton of data to like teach this thing?
Ton of data. That's the second one, just a ton of data. The thing about neural nets is they require very high volumes of data. And that's part of the reason why there's going to be neural nets themselves aren't, I feel horrible to say they're not difficult to make, because they are. They're very difficult to make. But they're not the most time expensive thing to make. You know, you can make a neural net, and well, at least my father, who is incredibly good at making neural nets, can build a decent one up in 2 weeks, sometimes a month if it's super complex. And you need a lot of different, rules, and you just basic. But most of that issue comes down to categorizing data and working out the data flows. So what takes time is the neural net actually training itself on the data and the volume of data you need for the neural net to be able to train itself effectively. So essentially a neural net does multiple trial runs to work out what's the most effective path to be able to reach the output. It's actually the same thing your brain does. That's why it's called a neural net. When you're learning to pick up a ball, you're shooting electricity through your neurons, and your neurons are trying to figure out what's the best path to shoot the electricity for me to be able to conduct the action of picking up a ball. And then we essentially tell it what those actions are that we want to optimize. And that takes time and data. And the worst thing you want to do is be presupposing that data to a conclusion.
Sure.
You know, you don't want to be thinking, I think it's going to do this, because it might not.
So out the gate, you're probably not going to have an auto harvester. That's going to be something that, is rolled out over time. Is that fair to say?
Well, sorry, what was that word that moves all the time?
Are you going to roll out the auto harvester, at launch, or is that something that's going to be rolled out after time, after doing a bunch of machine learning?
That's something that's going to be rolled out later. That's definitely going to be something that's going to be rolled out later. We're hoping by sort of Q1 next year. We want to really be able, and then we also need to have an audit on literally brand new technology that, building a neural net on top of a blockchain to be reacting to using smart contracts. There's a few things that we want to also make sure are super safe. We're hoping Q1 next year. That is, of course, like anything in technology, malleable, particularly when you're dealing with such new technology, because we need to make sure that it is in principle and in function safe.
Could you tell us more about the Genius Yield partnership? What's that all about?
Oh, that's got a few things to it. Genius Yield haven't decided what algorithm they're going to be using yet. Not that we're necessarily going to be helping with that, but just wanted to point that out. It doesn't appear that they're going to be using a neural net, so that's nice for us. But more than anything, one of the big things that I want to get out of the Genius Yield partnership is the fact that both of our AI mechanisms are susceptible to Oracle attacks, and we're highly susceptible to Oracle attacks. If our AI start getting fed poor data, we're going to begin getting poor results. And then those poor results are going to be feeding through to our different pools, and then, well, we can be attacked through that mechanism. So I really want to be looking with Genius Yield, not just we, also me. We and me want to be looking with Genius Yield to be looking up how we can really build a more secure Oracle system that will work for us.
So you're not.
It's always been.
So you're not planning to use already built Oracle, not Oracle pools, but decentralized oracles that are being made, like the Charlie 3 protocol. You guys
Absolutely, we're going to be using them. Well, I'm not saying we're going to be building our own Oracle. We're working out ways to make our Oracle supplies safe.
Gotcha.
Yeah. And then, of course, there's the classic trading layoff of risk. Hedge funds invest into other hedge funds because that's one way that you average out your risk. So never underestimate the power of trading portfolio management.
I wanted to talk about the voting real quick. I don't know if people know about the on-chain voting you guys rolled out and all that. I think it's really cool to have a governance token with governance was pretty cool.
Yes, we absolutely do. So users can go to the governance section of our website, and we take a snapshot, of course, before the vote. And you get to vote with your VyFi. The only thing I should add is that we can't look at VyFi currently that's being held on other exchanges or held on other platforms that aren't our own. So the VyFi has to be held in your wallet, or has to be held in your on our ecosystem. Sorry. All right, guys. I hate to be rude, but I'm getting really tired. It's 2 a.m. now, and I think I need to go to bed.
Yeah, no, I don't blame you. I appreciate you hanging out. It was a really good talk.
No, thank you. I'm glad you enjoyed it. Thank you so much for letting me waffle on about interest rates and global trade wars and a whole bunch of bullshit. It's really nice. I always enjoy it.
Anytime. I learn a ton in those. They're some of my favorite conversations where I'm learning that kind of stuff.
No, well, thank you so much. Thank you for being so kind. I'm not sure many people would be.
Yeah, appreciate you coming up and talking about it.
It was
very
informative. Thank you.
No, thank you guys. You're so kind. You're too kind. Do you have any? I'll take one last question if anyone's got one, just to finish it all off.
I do have one.
Please.
I was just going to ask you, actually, is there a good book you would recommend to someone who this might be their first crypto winter?
Oh, someone who this might be their first crypto winter. Look, yes, one good trade. And it's a book by Mike Bellafiore.
Awesome. Thank you so much.
And it's basically just a look at the mindset that you need while trading. And it's very focused on that mindset approach. Never underestimate your biggest, the technicalities of trading are bloody pretty simple. Like it takes 6 months to sort of understand it. It takes 2 years to sort of get a mechanism down, and then it takes the rest of your life to be able to handle yourself while doing it. So getting that, I guess you'd say, regimented and disciplined nature approach is what is difficult for people. They constantly get scared. You constantly react to emotions. You constantly second guess yourself, overestimate yourself. What I love about the market is there's the great equalizer. The market doesn't care who you are, what you've done. All the market cares about is if you were wrong or right.
Definitely. No, that makes a lot of sense. And I appreciate you sharing that with us. And again, thank you for taking time out of your sleep to come and explain and answer all the questions we had today. We really appreciate you.
No, thank you so much for having me, guys. And it's been a lot of fun.